Awesome. Hi, everyone. Today we're speaking with Mike from Tandym. We recently partnered with Tandym and they help online merchants offer a branded payment option at checkout. So before I hand it off to Mike to explain further, just would like to remind everyone that we are recording this session and we'll send everyone a follow-up email with the recording later this afternoon. Secondly, we want to keep the session educational and relevant to you guys. So if any questions pop up, don't be afraid to turn on your mic and chime in. We want this to be super interactive and specific to our team. Finally, make sure to mute yourselves when you're not asking questions just to prevent any kind of distractions in the background. So that's all I have, Mike. Why don't you start off with a quick intro about yourself and Tandym?
Awesome. Thanks, Cassandra. We also have Tom on from our team as well. So if you hear someone chiming in with a lot of knowledge about Tandym, that is Tom.
Oh, perfect.
But yeah, great to meet you all. My name's Mike. I'm in Chicago. My wife's from New York, so I have to wear this hat legally at least once a week. So don't let the hat fool you. I've been at Tandym for a couple of years now. And my background, broadly speaking, is in like the startup space as well. So this has been a really enjoyable journey. And it's been really cool to get to meet with a bunch of different agencies, talk a little bit about your brands. The goal for today, and Cassandra kind of laid this out, is really just to give you an overview of who we are and what we do. Happy to answer any questions as they pop up. We have a lot of slides. I'm not really going to go through all of them. But happy to kind of use them to highlight any answers that we might have to anything that comes up specifically. Before I dive in, Tom, anything you want to mention about yourself or any questions?
No, excited to meet everyone. My background with regards to brands was at Yotpo. So serving a lot of the same brands that now we serve at Tandym, and it's exciting to see new ways to help them, keep their audience engaged and lower their costs, and anything we can help brands with. If I can answer anything, I will, but Mike is an expert.
Thanks. All right, let me share my screen so you don't have to look at me the entire time. So broadly speaking, our solution at Tandym, and Cassandra mentioned this, is a branded payment option that e-commerce merchants can offer on their site that sits alongside all of the other payment options that they have. The big differences being our payment option only costs the merchant 0.5% to process every transaction. In return, it gives back some rewards, benefits, exclusives, fun offers, whatever the merchant decides is right for them and their margins to the customer to encourage both adoption and also consistent usage. And with that, and with all branded payment methods, you see a really cool uptick in average order value, repeat purchase frequency, really just customer lifetime value across the board. So that is our solution. This is new to e-commerce, but I'm sure a lot of you are familiar with this program in retail form through store cards that a lot of the brands on the screen here have offered in the past, usually brought to you by one of the many financial institutions that are listed here as well. Tandym benefits from our leadership team running these programs for these brands in their past lives, in their pre-startup lives, I should say. These programs have done incredible things for these brands. They attribute tens of millions of dollars every year in additional revenue. They create a lot of stickiness. A great example of that I always offer is my wife and I have a Crate and Barrel card. We bought a house about a year ago. There are definitely cheaper places that we could buy like the furniture and knickknacks and whatnot that we have, but because we have this card, we insist on spending more money than we should because we're going to get rewards. That's like a consumer behavior that you see across the board. And it's something that we've seen play out on our end as well at Tandym with the brands that we've partnered with. When you have a branded payment option, you're more likely to spend at that brand. And that's one of the big things we want to bring to the table. So as I mentioned, and you'll notice a few different brands that fall under the Smart Sites umbrella kind of sprinkled in throughout here in the presentation. But really, what we offer is this branded payment method. It's very easy, very recognizable for customers. There's no new brand that they need to recognize or educate themselves about. That definitely leads to an uptick in checkout share. As you'll see here, the credit or debit, the Amazon Pay, the Affirms, the Buy Now Pay Laters, the Apple Pay and Google Pays of the world. We're happy to sit alongside all of them. The big benefit that we have is we do offer this branded option that ensures that customers have a lot of familiarity, feel comfortable accepting this payment option at checkout, and then moving forward with it. There are also two ways for customers to apply. There's a credit and a debit side to this program. The great thing about that is there's something for everyone. Our goal is to move as many customers onto credit as possible. The big benefit there being we're underwriting them for a line of credit. So in addition to the money that they came to the merchant intending to spend, let's say it's like $100, when they all of a sudden have a $1,000 line of credit or up to a $5,000 line of credit, they're more likely to spend more. You see that sort of across the board. So for credit, the application is very simple. It takes about 30 seconds. There's no hard credit pull. Again, we get them up to a $5,000 line of credit. And then it's a standard credit card terms for them as a consumer. So they've got about 30 plus days to pay, as you do with a typical credit card. If you don't make your payment on time, there's a small fee that's applied. You can rotate on that, you can move forward and make your payments. It's all very easy. There's also the option for customers to use debit at application and checkout. This is very easy as well. They connect their bank account. They're able to draw funds directly from the account. They're still able to tap into all of those benefits. In either case, for the merchant, the benefits are going to remain the same. It's still a 0.5% processing fee. There's a couple other benefits that I'll get into a little bit later, including getting paid out same day, not having to wait for a typical credit card processing delay. That's obviously a huge benefit as well. So what are we actually seeing? There's a lot of cool benefits here, but what is it actually driving in terms of impact at our partners? And we've seen a lot of really exciting benefits. There's really three things we look at to judge if this program is being efficient and effective at our partners. It's average order value, purchase frequency, and checkout share. You'll see the brackets here. Pending the average order value of the site, you're going to see just slight differences here. So a very high average order value, obviously you're not going to see as massive as an increase in the average order value of consumers who are using our product. Same thing with purchase frequency. They're just not going to come back and buy that $1,000 bike several times. So you're going to see a little bit of a decrease there. But overall, just overwhelmingly successful program at the partners that we've been working with. So from an AOV perspective, anywhere between 40 to 100% increase. That's a behavior change from before they started the program to what they're doing now. So obviously, big increase there in terms of consumer behavior changing for the better when it comes to the merchant's perspective. Same thing with purchase frequency. I think you can tie all of these to a couple different things. One is for credit customers, they obviously just have more money to spend at these merchants. So going back to spend more of their credit line is something that we've seen happen quite frequently. There's also the rewards element here. I mentioned that earlier. What we see most frequently is merchants offering consumers something like 5% back to use at their store on the next trip. So it's a small rewards incentive. You can also change that to be like a free gift. Something like an exclusive membership club where you just get access to more offers, whatever it takes to get folks onto the program or to adopt that payment method at checkout. That's something we'll work with your merchants on if they decide they want to join the program to find something that works for them and fits their margins more so than anything. But again, once on the program, these are some of the things that we're seeing. And then when it comes to checkout share, anywhere between 8 to 20% is what we see really in the first sort of 60 to 90 days. These are also programs that build on themselves over time. So as the program continues to exist on a merchant site, they adopt more customers. Once customers have the program, they use it every time they check out. You start to see this consumer behavior shift grow over time and take over more and more of the checkout share, which is obviously a good sign when it comes to decreasing processing fees and things like that. I'd love to get into the credit and debit flows so you can see what this customer experience looks like, but I want to pause there. I know I've covered a ton of ground here. Any questions before we move into sort of a quick demo? Cool. All right. So to start with credit here, I mentioned quick application, soft credit pull, all of that is great. But what does it actually look like for a consumer or for a customer? So one important thing to point out first, so there's obviously the two ways to apply for this program, credit and debit. There's also two sort of broad categories through which a consumer can access this application. The first is what we call sort of standalone. That's anytime before checkout. So merchants sending out a marketing campaign, letting their consumers know that they've got a brand new way to pay, a new rewards program, however they want to refer to the program. They can do that. They can also embed these applications on product display pages, on their homepage, wherever it makes sense. In any of those situations, what's going to happen when someone chooses to sign up for the program is this is going to be a modal that's sort of overlaid on their page. So we don't take customers to an entirely different website. Everything stays on the merchant's page. Everything's still merchant branded. So we want to make sure customers feel very comfortable throughout this process. So to go through it here, this customer is choosing to apply with credit. You'll notice there are a couple different things that they're going to see right off the bat. Obviously, they're going to know what their reward potential is for this card. They're going to know that it's a digital card. They won't get anything physical. They can support their brand. All of this is customizable to the merchant, so they can kind of put in whatever they want here. First purchase discounts or new account incentives, those are also totally customizable, pending the type of merchant. This could be anything from 20% off your first purchase to 3x points back to use the next time you shop. Totally depends on the merchant's preference, and also things like industry and average order value play into this as well. Starting the application here, the first screen, all they need to do is their phone number, the last four of their social. If at any point they feel uncomfortable providing this information, again, they can just exit out and they're still on the homepage, they're still on the product display page. It's very easy for them to navigate in either case. We use two-factor authentication throughout. That's why the phone number is so important to us. They're not going to customers don't have usernames or passwords or like account numbers or credit card numbers to memorize. Keep it very straightforward with just the phone number and two-factor authentication. The application itself, all of this information up here actually autofills for about 90 to 95% of our customers. We use some data partners that are able to provide this information. So again, just keeping it really frictionless and fast. Obviously, you can edit this information if you need to, but otherwise, just your email and your income, check a few more boxes, have a quick underwriting verification process. Takes about 10 seconds. I don't actually know if I've ever seen it take 10 seconds, usually more like 5 to 6 seconds, but keeping it all very quick. And then once approved, in this instance, this customer is doing this application at checkout. So they're approved, they're going to see exactly what their order total is. They're going to know any discounts that are getting applied. In the future, this will be replaced with the points that they're redeeming from their purchase. So they'll know exactly how much they're saving thanks to the rewards that they've earned and are now redeeming. And then they're also going to be earning more rewards on every purchase as well. This is one of the more important elements of Tandym, is ensuring that there's always a carrot that gets customers to come back, whether that's the promise of like a free gift with their next purchase or points that they can use to spend on their next purchase, whatever that is, whatever's right for the merchant. It's one of the elements that really drives this program forward and contributes to a lot of those positive values that we looked at beforehand. So in any case, finalizing their account here, again, if they're looking at all of this and it doesn't look right to them, they can always exit out of it. Again, where it's a soft credit pull, so it's no risk to customers, but very quick and easy. They'll open their account, confirm their purchase, and then they're all set. Their purchase is complete. They've got some rewards they can use the next time they come back to spend. All of that good stuff. For declined applicants, you'll notice Tandym really takes center stage here. We want to make sure that people know that Tandym is the one that declined them, not, in this case, Plant Guru. We want all of the fun, cool stuff to come from our merchants. We want any of the not so fun stuff to come from us. So that's a very conscious decision we made. Any questions on the credit application before I go to the debit app? Yeah, Matthew?
So let's say like it's approved. Can they use the same credit application in store? Like, for example, we have a furniture company that does a good amount of e-commerce, but they also have like 10 stores or something like that. So they do a lot of business in person. And in fact, like they try to push a lot of people to their store so they get like test drive the chairs and couches and stuff. Is this solely like e-com, or once they apply online, can they also use that credit in store?
Yeah, it's a great question. So right now it's solely e-com. We're looking for partners who want to sort of like go in store with us. We have a couple folks who we've discussed it with. So it's certainly something we're open to. It's just not something that we've seen a huge demand for yet. But definitely open to that conversation. Do you mind sharing? Do you know what POS system the furniture store uses?
I can ask, but it's definitely a smaller sample size of clients that have like physical shops and e-com. Majority of it is online, probably like 85+%. But there was one that came to mind that I thought might be like a decent fit, but that does good online and in-person sales.
For sure. And it's listen, it's definitely something we're gonna like, we will build out in store at some point. I think especially when the appetite continues to grow for it to have an in-store presence. For now, we're really just focused on that online customer experience and growing that base. But again, very open to that conversation. Great. To quickly go through the debit piece here, it's going to be very familiar to anyone who's used a Plaid integration before. Very easy. Instead of selecting credit, you select debit. Again, we need the phone number. That doesn't change from credit to debit. Still how we ensure that we're verifying and avoiding any fraud. Two-factor authentication is great for that. It's also something customers are very familiar with. Once we're verified, just putting in our first name, last name, date of birth, email, some classic pieces there that help us. And then we use Plaid to integrate on the debit side. Sure, we have some folks who are familiar with it. If not, basically just allows you to put in your banking credentials. So if you have a mobile app, it allows you to sign in with that information rather than going to get your account number and routing number and all of that good stuff. Just makes the process much easier. It's something that customers are getting more and more familiar with. If they would rather log in with their account number and routing number, we do have that option available as well. So again, very easy for customers to do that route. But once that's through, they're going to see, again, any benefits they're getting on their first purchase, and then whatever the reward rate is going to be for the merchant. So in this case, 5% back in rewards. And we can keep shopping. This is very similar to what you would see on the credit side if you were doing, standalone application. The additional piece here would be customers would see exactly what their credit limit would be. So, hey, you have $3,000 to spend, or you have $5,000 to spend. That would be listed here as well before someone decides to open and confirm their account. A couple of the other things I mentioned, our team comes from the space of running these programs for some of the biggest brands in the country. What that brings with it is just a lot of experience and expertise in how to both drive people to this program, but also make it something that reflects our brands that we're partnering with. So there's some very easy things that we can do on that front. Things like adding modals to product display pages, adding banners to the homepage. These are all just easy ways to both draw attention to the program and also offer an opportunity for customers to apply and engage with the program before they get to checkout. Obviously, that's our goal. What you also see is when someone knows they have this new branded payment option, they're likely to spend way more on that first purchase, which is obviously a behavior shift that we're very, very in favor of. There's other things that we do as well. Our program success team works hand in hand with our merchant partners to ensure that the program is running effectively, to ensure that they're kept up to date with best practices. We build out a lot of marketing materials and collateral that our merchants can use when marketing the program to their customers. And then we're also just constantly working with them through data. So it's very much a hand-in-hand relationship, or at least as much as the merchant wants it to be. We're also very happy to let it be a plug and play and just have an incredibly cheap payment method sitting on the cart and at checkout for customers to adopt. One final note on this page, we also have a bunch of integrations. So when it comes to marketing the program, especially if merchants decide to opt into sort of like the the 5% back in store credit approach, which we see drive a lot of value. Being able to market that to customers and getting them to come back with that information. That readily available usage of store credit is something that we know can bring a lot of consumers back. This isn't like stack up your points until you have 10,000 points and then you can get a $10 credit. This is, you have, $4.75 you can use right now if you come back to the store. That's something that we've definitely seen be effective. To the effective point, there's, two things we obviously care very much about, and that's ensuring that our customers really like what we're doing and that our merchant partners like what we're doing. If neither of them did, this wouldn't be a very successful program. Thankfully, both have a very high opinion of working with Tandym. And I think almost most importantly, our customers have really enjoyed the experience. We're very aware that we're putting your brands at the forefront of this program. So, having that understanding that Tandym is really taking a side seat here. We're powering the program, but it's not Tandym pay at the end of the day. We really want to make sure that customers are having a great experience. So our net promoter score is something we pay a lot of attention to, ensuring that customers want to share this with their friends, have a very positive opinion about the program, something we monitor very closely. And we're constantly interviewing our customers to better understand how we can improve the program, and continue to make it supportive and effective for them and for our merchants. Speaking of, the merchants are obviously very important, and we've had a lot of very positive feedback from them as well. In terms of just making this program accessible, it's something we've spent a lot of time on. So debit really just ensures that 100% of customers can access this program. But even on the credit side, our approval rate is 70%. We're underwriting pretty deep to make sure that we're offering as many customers as possible an additional line of credit, but we know not every customer wants to open a new credit line or, has the best credit, so they may want to opt for different opportunities. But from a credit perspective, we underwrite down to about 550 on the credit score side. So trying to ensure that we're giving customers the best chance possible to have a little bit more spending power with their favorite merchant. From the nuts and bolts side of things, it looks like most of the merchants were on Magento on a first glance through the Smart Sites brands page. But we have integrations with all of the big names in e-commerce, including Magento. Really, it's just kind of a plugin we have on the back end. We do some testing with their team to make sure everything looks good, do a soft launch, just to, again, make sure everything's looking good. And then we'll help market the program more broadly once everyone feels like they're on the same page and that it all looks good. We also have sort of a custom API integration. So if anyone's on one of the other e-commerce platforms that we don't have a plugin for, something that we can work with them through. Takes a little bit more time, but doesn't cost anything extra. It's just something that we offer to all of the merchants that we work with. Couple final things that I mentioned, there's some benefits to using Tandym and kind of in addition to the 0.5% processing cost and same day funding, everything else is pretty straightforward. Refunds are, merchants will process those the same way they always do. When it comes to chargebacks, we follow the cancellation policy or return policy of the merchants. So, if it falls within the policy, we'll honor it. If it doesn't, customer takes it up with us. We're obviously protecting the merchant as much as possible there. That also goes for fraud and repayment risk. We take all of that on the Tandym side. For the merchant, as soon as the transaction takes place and is approved by Tandym, they're getting paid out same day. So just a quicker turnaround on the payments. They're also getting more data on those customers as well. Purchase behavior, shopping trends, other things they may want to look into. We're able to give a lot of that data back to our merchant partners, obviously in aggregate form, all anonymized, to make sure that everyone's in good standing. And then also our rewards data. I mentioned this with the marketing piece, but we know how important and powerful being able to tell someone that they have money to spend at your site can be. It's what drives a lot of the repeat purchase frequency that we've seen, across the different average order value merchants that we're working with. So we want to make sure you have that at all times. You can plug it into whatever marketing tool your brands are using. And then I mentioned the fraud and credit risk. Again, we take all of that on. at the top. One last piece, just from pricing and terms perspectives, obviously an important element of any program. We're very straightforward. Our only fee is the 0.5% processing fee on all transactions. We don't have a monthly fee. We don't have an integration fee. We don't have cancellation fees. Our big thing is enabling merchants to get this up and running, to have an incredibly cheap but powerful checkout option available next to all of the other options that seem like they're just getting more and more expensive. And to enable merchants to find what's right for them and for their customers without feeling like they're paying every month just to have this thing on their site. We want to make sure that they're able to sort of fine tune the approach and find a balance that works both to drive adoption while also keeping their costs low and their margin high. So I know we covered a lot there. I'll pause. Yeah, Matthew, question.
Yeah, I mean, maybe it's a weird question, but I think like one of the things that struck me even the first time Cassandra mentioned Tandym was the processing fee. Like, how do you guys keep the processing fee so low when all the other merchants we work with are like 2.5% to 4%? Like that, I think that was the biggest thing that struck me. I mean, everything else is awesome, but that one is like a huge value add, I think.
Yes. Thank God I have a slide just for this question. So, to kind of walk you through the 101 here. So typical processing costs are made up of a bunch of different people getting paid out, for lack of a better term. It's a very antiquated model. I don't know why it still exists in the online space, but it does. So a typical transaction, all of these different people are getting a percentage of that processing fee, which is usually between 2.5% to 3.5%. The biggest portion of that is going to the bank that supplies the credit card. So I use like my Chase Sapphire card. I get 3% back in points or something. That's really coming out of the merchant's pocket that I'm buying that good from. So I'm getting plant food, and I'm getting points that I can use to take a vacation this summer, which is kind of insane. Like the merchant is paying for someone else's rewards program. What we do is we create a direct connection with all of our merchants. So instead of having to pay out all of these other players and using what's called like the traditional rails, we don't have to use those. We're able to just settle up with the merchant directly and set up our own process. We're our own aggregator, acquirer, payment processor. Because of that, we're able to only charge the 0.5% per transaction. And the savings really goes back to the merchant to be able to fund their own rewards program at a cost that makes sense for them. That's also what allows us to like pay out same day, provide more data, things like that. It has a couple other cool benefits in there.
I think it's a very smart question, and it's the same cost benefits that big brands get with a private label credit cards, which is why they push us consumers to use their cards. They get about an 80% cost reduction on processing fees when they do that. But Visa, so the credit card companies and the big banks will not work with smaller brands. Companies of 250 million in annual revenue and below, they won't even bother. They do $1 million deals to help Cabela's create a card, and they process billions through it. So and I anticipate us not being alone in this game much longer with technology and the other things that Mike alluded to. Then now we're able to offer this to smaller brands. It just didn't have that benefit before.
Thanks, Tom. Any other questions?
I wanted to add something that maybe we'll start a discussion or other questions, but this Matthew's question also kind of alludes to our business model. But you're asking yourself, wait, so like, why not, right? Like, we don't make money off merchants. It's important to understand that we're a credit card company. Our core is risk and underwriting, and the whole process for the customer. The merchant part is the technology we provide to make the checkout as modern as any other payment out there. But Tandym exists because of customers using the credit card, and that's why it's offered at such a rate to merchants. It's not where we make our money, and it almost seems like too good to be true. for merchants, like where is the hidden cost? There is no hidden cost. These are there are points that they use, but they use that even when they do 3.5% processing fees, right? They give discounts, they have loyalty programs. We do not compete with them. We integrate with them, in fact. So they using our credit card saves merchants money and still boosts the existing reward programs that they have. So they two talk to each other, they communicate, they do not compete. It's important to us that you understand that for the brands you represent.
Yeah, Matthew, crushing it with the questions.
Yeah, you passed to Sungwoo. I think he had a question too. I can go after.
Yeah, it wasn't really much of like a question, but like at first glance, it reminded me a lot of like ShopPay, like just like the platform. But I think like obviously the differentiator is like pretty stark because ShopPay doesn't really incorporate any of these like functionalities or like just the concept of having like a branded card or like, you know, including and also weaving in like that loyalty program as well.
Exactly. Yeah. And I think something you'll see, and I know they just had a big announcement about it today about like Shop Cash coming out on the Shopify platform. One of the big differences between what we're doing and what you also see out in the market right now is we're not really doing like the marketplace idea. Our goal is to drive your customers back to your brands. So like taking some, Plant Guru, for example, isn't providing rewards that are then going to be used at another store. Like the rewards are only going to be used at Plant Guru. So I think that's a piece. Totally agree with you. The Shopify piece for a couple different areas. It's like a very seamless process. Actually, one of the things customers like most about Tandem is we have this express checkout for returning customers that is very similar to ShopPay. You put in your phone number, recognizes you, you're good to go. It's very nice. But earning those rewards that you can only use back at that store, I think that's an important piece here. That really adds like a differentiation between what you might see at some of the other players.
Right.
So my question was, if I recall from our original conversation, the ideal customer is like minimum 3 million in rev per year online. Is that right?
Tom, I know you and Tony talked about it, I think more recently than I did.
Okay.
I mean, yes, I would say 2-3 is the minimum, but there are some nuances. But go ahead and.
So I guess my question is like, let's say we have someone who's doing 1 to 2 million or something like that a year. Would you guys negotiate a rate like, hey, we can't give you 0.5%, but we can do 1% with you or something like that, or is it just like totally case by case?
Can I, Mike?
Yeah, go ahead.
No, it can absolutely be a good merchant for us. I want to give you an example. We're seeing there are some really cool brands that are still small, but already have a following. They might have a strong social media following. They have a lot of what we call like super fans. It's not uncommon for us to see a business that has a breakdown where 4 or 5% of their customers generate more than 20% of their revenue. And they're kind of asking for this, just give me something with my brand on it. My followers will use this. And suddenly 20-30% of their revenue has a 0.5% processing fee. That's a big value prop. And it's not bad for us. Yeah, it's not $100 million brand, like some of the ones we have. But there's a lot of value for us with small merchants who are building strong brands. I don't know like where your guys' brands are in terms of distribution of size, but like absolutely would love to talk to these brands as well.
Are there any like preferred platforms? I know that Shopify, you guys only work with Shopify Plus and not just normal Shopify stores. Are there any other instances like that with other platforms?
Yeah, the only other one I would mention is Magento merchants who aren't on Magento 2. There's just a lot of complexities there that make it very difficult for us to partner with those merchants. But outside of that, we have plugins for Shopify, WooCommerce, Magento, and BigCommerce. And then anyone outside of that, we have the custom integration that we can work with them through. So there aren't a whole lot of folks who are off limits, though. Great call out. Yeah. anyone who's below Shopify Plus, and anyone who's not on Magento 2, but using Magento, those are much more difficult for us.
Another note I have on file, guys, is customers that have an order volume less than $1,000 would be the more ideal kind of customer range for this, just because if, for example, I think Matt threw out that furniture company earlier, like people usually buy like a couch just once. They're not going to like repeatedly buy those bigger items. So I think that's kind of the reasoning behind that kind of spec. Not to say that they wouldn't be, it might not still be worth exploring, but just wanted to throw that out there.
One comment on that though, just AOV of above $1,000 doesn't always mean that the median is above $1,000. You can see a brand like Jensen. Yeah, they'll sell you a $6,000 bike, which sends the average order value really high, but then people keep buying accessories that cost $200-300. They would be awesome customers on our cards on Jensen Pay, for example. So just be mindful for a brand that has a high AOV, but a median that falls deep within our range.
I had a quick question about like pitching this to merchants. Do you find that it's typically easier to pitch it to merchants who already have some type of similar program, or is it easier to kind of pitch to someone who like literally has like nothing established on their website?
By similar program, do you mean like an existing rewards program in place?
Yeah, like a rewards program or like a payment. I know like Tandem is kind of like a hybrid, so it's kind of hard to really find something that's like exactly like similar. But yeah, like something like, you know, like a payment option or like, you know, like a loyalty program.
Yeah. So I think two ways to take it. One, we've talked to a lot of merchants who have a lot of payment methods. They're kind of like, they want a little bit of everything scattered at checkout. Obviously for those merchants, those payment methods are all very expensive. Like buy now, pay laters are usually over 5%. The sort of express checkout options, the Apple Pays, Google Pays, Amazon Pays, those are over 3%. To offer something alongside those that is only 0.5% is, you know, it's just kind of like a breath of fresh air to an extent, to offer something that isn't going to charge you an arm and a leg on every transaction. So for those merchants, I think, you know, pitching it as an additional payment option with some of these other benefits thrown in is obviously important. From a rewards perspective, I think that's really what drives the big difference in how you might talk about this. For merchants who have existing rewards programs, obviously Tom mentioned this, we integrate with them. We want to make those programs stronger. We want to use those programs to help grow adoption in a payment method that's going to produce better results than any of the other payment methods that merchants have. So figuring out kind of what that incentive needs to be for those merchants to drive adoption, what their margins are comfortable with when it comes to offering an additional incentive to, you know, Tandem members or their brand pay members. That's just sort of like more of an in-depth conversation.
Mm-hmm.
For merchants who don't have a rewards program, I think it's such a great fit for them, as long as, again, it's like within their margin for what they're willing to give away. We talk to a lot of folks who don't have rewards programs because they're very weary that they don't have high margins and they don't want to give away more than they can. That's where having the 0.5% processing fee and using that to offset the rewards that you're giving away can be really powerful. And then as Tom mentioned, those brands, I think all brands have super fans. It's just sometimes a lower quantity than other brands. But they're all there, and ensuring that we can move as many of those customers onto the branded payment method with just, you know, whatever rewards are going to start to move the needle. That's ultimately what we want to have a conversation about with brands. And so I think, like, I know that was sort of two approaches there, but I think the way that we think about it most is really the rewards versus non-existing rewards path. And again, there's two really great options there for how they're thinking about, you know, their goals and, you know, the outcomes they want to see every year.
Right. Do you usually have like, is there like a minimum requirement for like rewards? So like, you know, whether that's with like offering like $5 off or whatever, because I know like it, like you said, it depends on the merchant and like how they feel comfortable. But is there like at least like a minimum, or is there, how do you kind of navigate through that conversation with someone who's like more hesitant?
Yeah, I don't, at this point, we don't have a minimum per se. I mean, we obviously want the program to be adopted by consumers. So we'll work with merchants to figure out what works for them. But in terms of, and I think there's two ways to think about it. There's, we could think of like a new account incentive. So, hey, if you use Tandem on your first purchase, you get X% off, that first order. That's one piece of it. And then there's the ongoing rewards piece. So every time I use this payment method, what am I getting back to use on the next payment method? Those are both dependent on the merchant. I think I mentioned there's a lot of things we can do there, whether it's a % off your first order, points back on your first order. All of those are things that we can sort of, manipulate pending the merchant. At the end of the day, though, we do want to see something in both of those camps. Otherwise, we know we're not going to see the adoption that we want to see that's actually going to make this program effective. So we don't really want to just be sitting out there with just the brand and no reason for someone to use it, because we know it's not an effective way for this program to actually grow within a company and provide the kind of value on the LTV, AOV, repeat purchase frequency front.
Mm-hmm. No, that makes sense. Thank you.
I think that's another great question. You guys probably notice this just like we do. Brands tend to be very particular about how they manage points, right? Like you see so many different options out there. So a few things to that. One, we provide a lot of flexibility. Like if they have no rewards program and they really want to get a foot in the door, then we do give some of the capabilities there. We're not trying to compete with Yotpo or other programs they've developed, years of capabilities. With them, we just integrate and use what you guys like. So for the late adopters of loyalty programs, we have capabilities to offer. Then they get both, right? They get a reduction in processing fees with our card, and they have some program running. And if they ever want to graduate to the bigger platforms, great, we integrate with them. I think, we're still young. We're collecting a lot of data. And what we're starting to do now is basically walk the brands through this playbook of adoption. Because we were sharing with you very transparently, if they don't increase adoption, we don't make money. It is a shared interest here, and we work together. It's a success-based product, really. If we don't help them increase adoption, we don't get paid at all. And so that's why we're building a lot of data and playbooks to walk them through what works for them. But again, we're going to meet a marketing team that's smart, has been doing something for a long time, and we don't manage this for them. So this is like the challenge, if you will, that we have, is like how to work with them to increase adoption. And so far we're seeing success because we're targeting brands that have a lot of loyal customers, and they immediately adopt the brand, and then it continues to incrementally grow. So but how we play with rewards is definitely part of Tandem's DNA, and we're constantly getting more data and learning more about that. So it's a great question. Can we ask a question from our end? If no one has a question?
Yeah, go for it.
We've kind of been stating some assumptions about how brands view both the reward side and being particular, and what they're trying to do, and how they're trying to increase wallet share, and also our assumptions around processing fees. That's what we're seeing for the merchants we have. What are you guys seeing in that space? What kind of appetite, as you talk to your brands and potential additional brands to work with? What are you guys seeing in terms of appetite for both of these things and for combining them, since this is pretty new for a lot of the brands?
Well, I personally think like, are you talking about like both the loyalty piece and also like the credit and debit, the payment piece?
Yes.
I think
We want to learn from you guys too today.
yeah, I think with my clients personally, like, and I can only speak for my set of clients, but I think probably they'll be more receptive to the loyalty, or the loyalty program piece, just because it's like it's something that they're familiar with. Um, of course, like if I reach out to them, who knows, they might surprise me. But I feel like the credit, like the payment piece, it's like if they kind of learn through like the line of credit, you know what I mean, where customers have to like fill out an application and like it could potentially like affect their credit score. I feel like I don't know if they would want to necessarily like offer that to, you know, their users, but I feel like the loyalty program, I think like that's really it's a really intuitive platform and piece of like Tandem, and I feel like if we like show that visually, like they understand it immediately. But I could see or anticipate some hesitation with like the payment piece of it, just because, you know, of like, you know, the whole credit application process.
Good to know. A quick note on that. So it is a soft credit pull, which means there's no ding on their credit for going through the application. So
Right.
definitely, we know an important piece of the program because we know people would likely not be applying in droves if it affected their credit every time.
Right, right. Yeah, I think that's where that like education piece comes in for both the merchant and like the users, because like the merchant wants to know like, okay, like this won't really, it's like a soft credit pull. It's not like you know, as like drastic as maybe users would seem, but also you kind of have to educate the users so that they know that as well. And like, you know, because I know a lot of people like they don't want to like open up a bunch of like lines of credit, and they don't want to like anything to like negatively affect their credit score. So yeah.
Yeah, absolutely. Anything else? I'd also be interested to know if the idea of, you know, the processing costs rising or trying to sort of like save on that processing piece. I'm interested to hear how, if anyone has any you know, any thoughts to share on how they think their merchants might respond to those cut fees, or if that's something that's come up in the past. I know it's a very exciting topic to bring up with your with your partners.
But maybe, are you guys hearing, I mean, there's lots of things happening in the market right now, right? Like customers' access to capital, cost of interest, like rising interest rates. It's a tight time for businesses, right? Uh, are you seeing anything there? Are you hearing stuff from your brands around cost cutting, around improving retention of customers? Like any conversations with your brands around that?
Yeah, I can hop in on this. Hey, I'm yet another Matt P. We keep collecting those. I'm on the PPC team. I deal with a decent amount of e-commerce, and I have clients who do like blinds, who do kitchen remodels. Those are more like luxury end type things, and for them, they are hands down first ones cut volume wise, right? Like as soon as the economy started to turn, it was something that was on our radar. We've been keeping an eye on it, seeing how it's kind of evolved over time. And the biggest thing that we've been kind of capitalizing on is like, hey, volume may be down, but our AOV is something we continue to improve on and continue to maximize as much as we can. And I think that, through the payment provider like you guys and things like that, right? Like that, it could definitely be an integration that would work for a bunch of my clients who, right now they're viewed as more luxury goods, right? When eggs are, you know, however much a carton, like everything's way too expensive right now, right? So, you know, I've definitely seen it impacting my clients. We have the advent of AI as well. That's been impacting a lot of my clients. You know, any of my clients who do like, I don't know, anybody who we have who's done like logo design or anything like that, which is less e-commerce based. But I definitely am curious to see how, like, you know, if you guys are, I don't know how an AI could play into any of that stuff, but like, it's just another thing. So
You mean how it could play into what part? Into our tool?
yeah, into like rewards and that kind of stuff.
I actually think it could. I mean, I'm not going to say we're doing that yet, but it's something I would love to see in the future, where the whole management of rewards as a tool to drive adoption is absolutely like very data-driven experimentation. That's a classic application for AI. So I don't think anyone's doing it right now. And like, it's definitely an opportunity. Everyone's so new to this, so like it's all kind of being born right now. But I will not be surprised if pretty soon you're going to have a lot of help to the marketers of brands to see how to manage that, both for, you know, regardless of payment. By the way, just I know that in the loyalty game, tell me what you guys are seeing. A lot of brands aren't able to pinpoint and say how profitable is it for them, right? It's an expensive, like, it's an expensive initiative. So I think AI will absolutely help with that.
Definitely. And as far as within the loyalty program that you guys offer and all that stuff, I assume that, I mean, would you be able to do like audience manipulation? Like, hey, if you can get these guys to sign up for something else, you can give them a specialized offer versus another grouping or anything like that?
Yeah, we can do a lot of, I mean, once we have customers on board with the program, there's a lot that we can do to sort of like, you know, highlight the exclusivity of the program. I mean, there's like SKU specific product boosts that you can do, to, you know, hey, for, you know, Rare Seeds Pay members this month, Basil is like quadruple points back. You know, it's more for moving products that, you know, or want to highlight for whatever reason. But from an audience manipulation perspective, there's a lot we can do, both to like A/B test on the site, see if certain consumers react to things differently. I'm not sure if that's fully answering your question, but there's definitely a lot that we're able to do with the program to sort of highlight certain elements and certain members.
Yeah, definitely. Because exactly like you said, right? Longfield Gardens it's flower bulbs, right? I mean, we have like, we literally have like a whole email list just built for our fall, and then a whole email list just built for our spring flowers, because they're like entirely different markets. And it would be nice if we could do like, hey, this is loyalty group for fall, loyalty group for spring. So it sounds like you guys have that capability, which is nice. And we can push different products. So, you know, cool features all around. I mean, I don't really have kind of any questions, any other questions, but that's just like my specific take on things. So.
For sure. I mean, it brings up a great example. I think one of my favorite things that we can do is, if you have a customer, to take that example, who buys in the spring, they don't buy in the fall, what we can do is say, hey, let's drop $5 into their account. That's only good for the next month. They can, you know, let's see if we can get them back to buy something this fall and increase the purchase frequency for the year. Like, those are pieces that we're really excited to play around with merchants, to just figure out what those triggers are to turn someone from a seasonal customer to a year-round customer.
Definitely.
Great. I know we only have a few minutes left. Tom, any final questions from your end, or any questions from the team?
Love the questions though.
If it's helpful, I know I highlighted it in the chat. There's a couple things that we can do if contacts or partners of yours seem like it could potentially be a good fit. And I'll drop a list of some of our existing partners into the chat. We can do a couple different things. We can build out some customized presentations for them, so they get a sense for what this could look like on their site and with their brand. We can put together some case studies to show how this program's been working at similar brands or similar average order values. We can also do a financial analysis for them to give them a sense for exactly what the impact would look like at their site using some of the data that we've been seeing at other partners as well. And then given the pricing on programs like this, as Tom highlighted, this is incredibly merchant friendly. So the ability to get this up and running and then, pilot some opportunities to get folks onto the program and immediately start increasing that margin on every single one of those orders is definitely something that we're keen to explore. So we're happy to work with you all towards that.
And Longfield looked like a perfect customer or merchant. So, and they already use Yapo, which we're integrated with. So would love to talk to them.
Wonderful. Well, thank you so much for your time today, Tom and Mike. We really appreciate the discussion and the presentation. I'll be sending out a follow-up email to everybody on our side, and I'll make sure to CC you both so you can see that as well. If you're able to share the deck with us, would love that, or any other case studies too, that'd be great. But yeah, let's keep in touch, guys. Feel free to reach out to them. I'll have them CC'd on the email. So if you have any specific questions, reach out to me or Tom, Mike. We also, we're more than happy to schedule a call to learn more about a specific client. Awesome. Thank you so much.
Thank you, guys.
Appreciate it, y'all. Thank you.
Have a nice weekend.
Thank you.
Bye.
Bye.
Thank you guys. Have a good weekend.
Have a good one, y'all.